Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analysts at Trade the Chain. My name is Nick Mancini, Director of Research, joined by CJ top left, Monte top right, both senior research analysts at Trade the Chain. We are sponsored today by Didex, and of course, we are using the TTC dashboard to crush trades morning, noon, and night. So shout out CJ, for that beautiful intro. He's been kicking butt on the design and the trade, so got to give him his flowers on that side of things. But speaking of the crypto and TradeFi markets, I don't think we've had a busy past 3 days. There's been weird news almost every single day, and we are going to break down everything going on in crypto, equities, dive into a little bit of commodities. We got some earnings that are tonight. So lots to chat about. Let's go ahead and dive in. So the first kind of topic that I wanted to talk about, we're going to go in kind of chronological order here on the way that things went since we last spoke on Monday. Michael Saylor. So before he even announced, what I have up right now is the 14.4 million that they bought throughout July. So typically, and CJ Monte, correct me if I'm wrong in terms of your sentiment tracking, your historical tracking, but whenever Michael Saylor tweets that he's already executed buys, it's typically kind of a short signal. Not always, but it's something that, traders will typically interpret. But I think the crazy part is after this, MicroStrategy and Michael Saylor announced that they're going to be selling $750 million worth of stock and assets to fund a pure Bitcoin purchase. So at some point in the near future, we should be expecting potentially, $750 million worth of inflows. But I think the one caveat and the reason that we're not seeing massive green candles and why we didn't get above 30K on Tuesday is this takes time, right, guys? Like, you're not just going to call someone up and be like, buy $750 million worth of my stock that I'm going to go put into this volatile asset that could further impact my stock price, considering it's basically a proxy to Bitcoin already, considering how much they own. I think they own about 1% of the Bitcoin supply right now. MicroStrategy, a US company, 1% of the total supply. That is outstanding right now, I should say. So that's quite fascinating. So I'm just going to pause here. Monty, CJ, I kind of, we don't really need to talk about much about his 15 million in July. That's kind of low compared to his total amounts. And obviously we saw it didn't have too much of an impact, but the 750 million, are you guys, is there a time horizon you guys have in mind? Do you even think that this matters? Do you think the market will start reacting positively to this soon? Because obviously, getting capped at 30K was certainly a puzzling situation at that time. So any insights on this, or are you just patiently waiting until we see some cash inflows into exchanges?
For me personally, I'd probably just say the latter. Saw some funny tweets on Twitter about this where it's like Saylor basically round tripped $1 billion bag. What do you do when you round trip $1 billion bag? Bet more. So that's what he's doing. As for its effect on Bitcoin, seems like it's pretty already efficiently priced into the market. There's some altcoins that have actually been moving pretty decently today with the risk on recovery in the market, which is interesting. But as for Saylor and this BTC purchase, feels priced in to me. I don't know if you feel differently, Monty.
No, I agree. I think what's more interesting is the effect it's having on the price of MicroStrategy stock, down almost 4% today on the back of this news. It's interesting because, it obviously benefited from the ETF news, and the stock pumped significantly, went all the way up to almost, 480. Now we're sitting at 392, and you would think that more Bitcoin exposure would give it higher correlation to Bitcoin, but clearly we're not seeing that, and the market's responding very negatively to this purchase of Bitcoin. So it's going to be interesting to see what happens to MicroStrategy, because it's not very often that I look at my watch list and I see this. I see in the crypto related equities, you see Coinbase, Mara, Riot, Galaxy all up, but MicroStrategy down. So clearly the market wasn't particularly fond of that purchase. And I think that's being reflected in this sort of divergence between the basket of assets that it's most often compared with. So I think that's definitely worth noting. And yeah, it's just an interesting phenomenon.
Yeah, I mean, it's a really good point to make. I would assume that most of the downside action is a kind of a front run for the eventual stock sale. But I think the one thing is this isn't crypto, this isn't blockchain, so we're not going to really know when they're selling until after they report it. So it's going to be kind of a waiting game, and there's not too much to really look at, because what they're also going to do when they purchase 750 million is they're going to buy it through OTC. And then the market maker is going to deal with that, into the market. So, and it's going to be a drip by drip kind of action. So it could be a nothing burger, but I think it is, it's going to be something that the bulls are going to hold on to, I think, throughout the rest of August. So it'll be very interesting to see if we do see any upticks, and if we do, I think we're, if we see a lot of Coinbase buying, I would assume that that's going to be Sailor to some degree. So we'll be keeping a close eye on that as Monte, CJ, and I very much like to do. We love to track the different exchanges and see what's going on, because there are some good things to glean from that. So moving forward in terms of the news, again, this is not directly applicable now, but we've seen a few Ether futures ETFs be filed. And I think, futures ETFs, when I hear that, I hear hedging, shorting. I hear this doesn't seem like the best news, at least for short-term price action, but it is a start. And we do know that Bitcoin futures ETFs have been around for several years now. So, I think this is, a step in the right direction, but I certainly wouldn't call this wind in the bull's sails by any means. CJ, Monte, do you tend to agree with that?
Yeah, I definitely tend to agree with that. I mean, it's not like this is any sort of BlackRock ETF news, and it's a futures ETF. So yeah, I don't know. And obviously, like, if you look at the effect it's had in the market, it's done nothing. So is it that significant? No, I don't think so. I think this is just another ETF that will likely get shot down. But it's funny. It says, like, when it rains, it pours. This really is kind of a numbers game, right? One of these things has got to get through. We got to just keep filing ETFs, and then eventually one of them will get through, and that will be people's on-ramp. But for the time being, the SEC is acting as a pretty strong filter to any sort of ETF filings, and I wouldn't expect this one to be much different. So.
Yeah, they've clearly been a lot more fun towards Bitcoin, especially, that Coinbase report that came out that was like, if you just stop trading everything except for Bitcoin, we'll kind of just walk away and everything's cool. And then Coinbase is like, no, you're insane. That's, 70% of our revenue is going to go down. So, the clearly Bitcoin is the darling of the regulators. If you could even say that, it's almost like, the tallest midget in the room in terms of that perspective. But I definitely agree with you on that side, Monty, that, futures ETF is not going to be a bull run starter. And if anything, it could actually, impact in the inverse, meaning, send us a little bit lower as spot holders who have been holding a long time hedge as we go throughout the year. So we'll be following this, but, more filings is certainly moving in the right direction for the industry. So the other thing is, and this is absolutely wild, especially, this doesn't quote the source, but the source was Semaphore. And if you guys remember Semaphore, it was a big deal because they were reporting on FTX and SBF back when that debacle started. But SBF is Sam Bankman-Fried, founder of FTX, was the largest funder of it. And I don't think it was a co-founder, but the majority of the equity the private equity that came into the company was Sam Bankman-Fried. So it's interesting, whenever you just understand kind of who's got their fingers in what, when you're talking about negative or positive things for Binance, if only one, person's reporting, just something to keep in mind. So basically what this says is that the DOJ is considering fraud charges against Binance, but they're concerned about the impact to consumers, which Monte, CJ, correct me if I'm wrong, that doesn't really sound like the DOJ, which is one thing. So, I mean, if you look at this on two ends of the spectrum, one, maybe this is true and Binance kind of slips out with a massive fine and still business as usual, at the end of the day. Then the other side is that Binance is in such a poor position and so impactful to the broader crypto industry that bringing them down would quite literally be the domino that kind of, or pulling the card out from the house of cards that kind of makes everything collapse. So either way, it's extremely unusual. And I really don't know what to think of this right now. The market kind of interpreted it relatively positively to start, but obviously looking at price action, it did not hold, and eventually we traded lower overnight. But no one else has been reporting on this, so I feel like it's worth mentioning just because it kind of took everyone by storm, and it is an official report. It was requoted by many top outlets. But CJ Monte, let it loose. What are you guys thinking about this? BS, some legitimacy. Give us your raw feelings here.
I mean, I try not to get too bogged down in the data or try to predict, macro policy and things like this. There's a couple things that could potentially be foreseeable, like a BlackRock ETF in Ethereum. Speaking of like the ETF for ETH futures, when you have like a staking yield, that's very interesting and could make a lot of money for those potential ETF providers. But as for like this news to me in the markets, like, is really only relevant to my trading directly when you have news come out and the market does something that is unexpected or like basically the opposite. I always refer to this as like news failure. But if like, let's say rates come out stronger or higher than expected and the dollar is strong, like makes perfect sense to me. Therefore the news isn't really relevant and you just kind of proceed as things are. And so the fact that there's no, real market response to like the ETF and a lot of there is to the ETF. But to the ETH ETF specifically, there just hasn't been excitement or any market impact really whatsoever that I can really tell. So yeah, I don't really have any opinions on this. I wasn't really aware of it.
Monty?
Yeah, it's tough. It's tough to make. When I saw this, I was like, what is going on? Like, I really don't know what to make of this. And like the idea of them using like fines instead of just outright rejecting ETFs, I think is an interesting concept. But yeah, no, I don't know. I think that this isn't going to have much effect on the price of ETH currently. So I wouldn't put too much weight into this news.
Yeah, I think the significance around this news is, and we've talked about this on, Get Rev Radio, and I think we've even mentioned it, all three of us, and maybe even with Alex, is kind of the impending DOJ case against Binance that everyone's been rumoring about. We obviously, nobody knows anything official, and this was kind of the first news that we'd heard since everybody was rumoring. So this story gets more deeper, and of course, CZ tweeted his famous 4 actually right before this article came out. So that was another, fascinating thing. So it's the information flow around Binance it's fascinating. We obviously don't have anything specific or concrete from this, but I think if anything, this just adds more confusion to the topic, and possibly, maybe the goal here is someone tied to FTX that has a crap ton of cryptos trying to get these long or these shorts to close to give a little bit more life to support. I don't know, but I think this is something where you can kind of get your tinfoil hat on and start playing with theories, because nobody knows, and your guess is just as good as CJ Monte and I's right now. So, but moving forward, let's talk a little bit about price action. I saw just OKN in the comments, Coinbase earnings miss or beat. We're going to talk about that just a couple of minutes, so please do stay with us. First thing I wanted to go over is DXY, US dollar index. So today, I believe, the BRICS nations, made another announcement that they're continuing to work towards removing themselves from the US dollar system and using their native currencies to trade with each other, which is obviously another knock on the dollar. We had Fitch, ratings downgrade U.S. debt, and obviously, we are sitting in a higher for longer rate territory. So the fact that this is above 102 certainly did not spell too much positivity for risk, but it is, sitting at that confluence of support, which was previously resistant. So if it does break back down into this level underneath, 102.4, that does give risk a potential opportunity. And RSI is getting to be a bit overbought. That doesn't automatically mean we're going to reverse immediately, but it is important to consider exactly where we're at. I talk about deviations quite a lot. So a deviation like this, trading back under, certainly I think would add some wind in the sails of risk, as I've been saying lately. So, but I know, Monte, you kind of had a bit of a different idea than I did when it came to DXY. I think you're of the mind that deviation is more likely than I think. But what are you thinking on DXY right now?
Yeah, that was really interesting news that, those nations were no longer going to be using the dollar. And I thought it would have a more profound effect. I think it still may have marked the top. You have that moving average there. That's also a highly critical level for the DXY throughout the last basically calendar year. We've seen it trading around that level. And although at the beginning of like that uptrend, so after that big downtrend in the DXY that we had there in July, or here, I'll just share my screen. After this big downtrend we had here at the beginning of July, people were talking about, the correlation between, equities and the DXY is dead. We're not seeing it anymore. And they even were saying that when we were moving up as well. And that was true because they were not moving in the fashion that we had come to expect, in the sense that there was an inverse correlation between the DXY and risk on assets. But the fact that there's a news-driven catalyst driving the DXY down, I think still could be enough to trigger risk on price action in the equity markets. Because if that news marks the top here and we're unable to, get above this level of 103, then ultimately, like, this is just another series of like lower highs. And it's been lower high, lower high, lower high, lower high. If we get rejected from here, what's to say we don't go back down and retest the bottom of the range? And during that time, I would expect risk assets to show some strength. Another thing, the fact that we had such a bizarre, bearish engulfing candle here in traditional equities, I think led to a lot of premature shorts entering the market. And those shorts they could plug rocket fuel to propel us to new all-time highs. If we do get to new all-time highs, I'm going to be injecting a lot of capital into this market, because I think that fund managers are going to have to start playing catch up. They're going to have to start investing money into highly speculative assets. And that is the environment that I like to be trading in. So yeah, we had a little bit of a different take, Nick, but I still think at the end of the day, if the DXY, if this is the top for the DXY and it's just another series of a lower high, then we could see, tomorrow and into next week, some nice risk on price action in some of the stocks in the NASDAQ and also some of the crypto related equities as well.
Yeah, and I mean, it's not that I completely disagree with you either. It's I do think that if DXY is going to reverse, now is the time, right? So that's what I'm watching closely. And in the GTC community, I got out of most of my shorts. I actually re-entered some ETH and Matic just based on a double top and a really ugly hourly wick, but I'm monitoring shorts closely, because these lows that we've hit, I was talking about those 28.8K lows for Bitcoin and whatnot, they've been holding relatively strong. And that could also be, on the crypto side rather than the equity side, as Monte mentioned, that could, be another sign that If support's going to keep holding and DXY may do a little reversal, then that could, maybe we climb back a little bit, maybe grab the highs again. All of this is possible. So, we're not, trying to short down to 25K or anything like that, but we're in a position where I think you should start looking for longs, but the environment continues to show uneasiness, right? So that's the really difficult part about entering swings right here. And Monte made a really good point. DXY deviating, equities making their way back to the highs. That's a really good signal for more longs. So really good point there. Let's move on. Monte did mention, equities, but let's just kind of talk about where we're at on maybe a little bit lower of a time frame before we dig into Bitcoin, and then we'll get into ETH and Coin. But I marked out this 45.11 level for a while, and so we obviously had multiple tweezers down here. I told the TTC community many times we broke this level that 45.11 was pretty much going to be a certainty, and that did end up playing, but obviously extremely oversold, not exactly bearish divergence or bullish divergence, I should say, but close enough. And it's obviously, bouncing off of this range right here, which is exactly what you want to see. So if we can get above this previous daily close, I think, we'll probably end up riding back to this 45.60. And then that's going to be a really critical level as Monte discussed, because then we'd be breaking back into this range. And if you're back into this range, then typically the technicals say that the highs are in play, as long as you confirm in the range, which could, take days into next week, but very much something to monitor. And then obviously, we've got this estimated 200 moving average on the 4-hour, which has pretty much been our roller coaster bounce multiple times. And then obviously no touches throughout this whole area right here. So that'll be very interesting to see if we hold this and continue that trend, or if we drop lower and obviously break that trend, which would add even more fear into the market, I think. So critical junction here. Monte made a really good point. Let's see if we can get back above 45.60. Then we'll start talking about some more longs again. Anything on this, guys, before I jump to Bitcoin? I know Monte kind of discussed it, but just want to make sure.
I want to keep an open mind about the fact that, I see you smirking, Monte, but this is a point that I think is important, and it's like,
no, sorry.
I haven't even started it yet. I mean, give me a chance, right? Anyways, the DXY, it seems like we have this binary perspective where it's like, okay, if the DXY is up, therefore the S&P has to be down, and that relationship didn't always exist. It really started after COVID's QE. That's just when the relationship started. And it's not always going to be like that, most likely. In the 90s, if you look at the DXY chart, it is ripping the same in line with tech stocks. So that was a very bullish period for the stock market and the DXY. And so I don't want to be completely closed-minded to the idea that they could both go up in 2023 or 2024. So
good point.
That's all I got about that.
There is no, if you go back decades, there is always a period in which CJ's right. It's not always inverse. So that is a really good point to make, and we'll have to keep an eye on that. And that's kind of why I also offered the idea of the BRICS situation almost being a double negative, just because it's, although we are at support and I do think we're due for a bounce, that could also be something where DXY reverses and some confidence in America, along with the whole higher for rates, could be a little bit more of an issue as well, because, the fact that our debt is downgraded makes, our currency, our debt, our work, a little bit more expensive, and that could pose long-term issues. So which are very difficult to predict. So just something to keep an eye on, because there's a lot of weird macro stuff going on in 2023. So let's move over to Bitcoin. As you know, this is a painful chart. I'm not gonna lie. It's been a bit difficult assessing lower term price action, and that's why we've been kind of trying to play it level to level. Obviously looking for shorts around 29.5, break above 29.5, look for longs. And then obviously this 29.7, 30K was the cap. But as you can see, it quickly deviated above 29.7, broke back down and grabbed the low end of the range now before just sitting in between this range and in a very annoying fashion, if I might add. And if you're trying to trade these candles, I mean, look at this. You got rejections and wicks on the key levels, and then it drops back down and it's getting bought right back up. So I mean, this is difficult even for a lower term trader like myself. But what I will tell you is I'm looking for a confirmed break above this VWAP, which we have not gotten yet. If we can get that, I do think that we'll retest 29.5, and if we can get above 29.5 again, it would not shock me to grab the 30K highs again, which would then set us up for more shorts, or possibly a reclaim to then grab this 30.5 level up here, which coincides with some of the highs from back when we traded in the 23rd of June, 20th of June, and a couple days earlier. So this is it's tough sledding right now. So I'm not going to lie, even for myself. But what are you guys thinking? I'll kind of zoom out on a higher term perspective. Maybe you guys have a different chart than what I'm looking at, because I've been trading lower time frames just because of how gross and tight these ranges have been. But what are you guys gleaning from the Bitcoin chart? Do you think it's time to start looking for longs? This does kind of look, potential inverse head and shoulders forming. Maybe if we, run back to 28.9 and then head higher. There's a lot of ways to interpret this chart. So I'm just kind of spitballing what I'm seeing, because it almost changes every day at this point. So CJ, Monte, maybe Monte first, because I know you've been on the Bitcoin chart a little bit more closely than CJ has.
The only thing
I've been on it. The price doesn't change. Whoa.
He said he was going to me. Calm down. We know you've been on it, all right? But listen, the only thing I'm gleaning from this chart is that you shouldn't be trading it, because this is horrible. Nothing's happening. This is straight up sideways price action. There's a less than 5% chance that if you're trading this chart, you're making money. That is a guarantee. I know you're not supposed to use that word in finance, but looking at this chart, there's been no foreseeable catalyst that has driven price in either direction. You're essentially betting. You're essentially gambling. You may as well go to the racetrack and bet on the horses if that's what you want to do.
All right.
Look at the equity markets. That's where the volatility is. That's where the action's happening.
I mean, it's a good point. Equity 4 hour compared to Bitcoin 4 hour. It's
a
completely different story.
So why would you trade this sideways, boring, paint drying, grass growing asset when you could be trading equities that are reaching very high levels of volatility?
Did you emphasize the first few letters in asset, Monte? Is that what I heard?
Shut up, CJ. CJ, I know you are pretty heated, pretty passionate. You got something to say about it, or do you need me to accuse you of not watching the chart to get you going?
Nah, I just think there's more interesting stuff than the 10-minute Bitcoin chart that we can talk about, like TLT, or like what Ackman is talking about today, trying to shill retail on these 30-year treasuries. I actually do think that's a pretty interesting trade, maybe down the line, but it requires... I don't think we need a chart. I mean, we can just speak freely about this. It's a good trade, I think, longer term, but it requires, and this would be like buying something like ZF or ZN in terms of a future. So I think that is an interesting trade, just based on how crowded fixed income is and how involved in fixed income everybody's been over the past few years. But it needs some type of catalyst, and I don't think you're going to see that catalyst until the Fed raises or lowers. And until they do anything like that, it's there's no real trade to be had. But
what do you make about
that move? Last thing I'll say, Monte. Sorry, it has been one thing I will say is that the sentiment around that particular asset, and if you pull up like TLT, you'll see it like the sentiment is very extreme, almost reminiscent of the dollar and like how the dollar was dying a couple weeks ago, apparently.
But I mean, you make a good point. Just to pull the Bitcoin chart back up, I'd say, what I'm looking for, just because of, it's disgusting and gross, is I would expect us to probably grab these lows again. If you had to hold the gun to my head, but agree with CJ and Monte. I feel like a bit of a masochist trying to trade Bitcoin as much as I have these days. So it's been painful and stressful. I'm not gonna lie, but we continue on. So CJ made a really good, I actually want to pull up the 30-year chart just to kind of give some context to what CJ was talking about.
Toss a question to CJ because, CJ, you posted in our community earlier about the very apparent similarities in price action between Robinhood and Coinbase. Obviously, Robinhood, for anyone that hadn't seen it, got beat up bad today post earnings. It beat on the top and bottom, but still opened down significantly. Do you think that like TLT and watching the TLT chart could be a good precursor for watching the Robinhood price action? Because like I feel like their customers, and same thing with Coinbase, too. I think you can make the same argument. They're getting
because the interest.
Okay. Yeah, because of the interest. Yeah. What are your thoughts on that? Do you think there's any merit to that or no? I was just wondering because the TLT chart and the Robinhood chart falling like this at the same time.
I didn't think about that. That's pretty. That's a pretty clever connecting of the dots. Yeah, I mean, I do think that's a viable kind of outlook. I hadn't looked into it. Maybe.
So what is your idea, CJ? Buy TLT or sell TLT?
Oh, no. I mean, I'm not doing anything with it right now. I just, people have been so, retail specifically has been long TLT for the past month in the form of like futures. If you look at like 5-year or even like 10-year, which would be ZN, for instance. So if you pull up the chart ZF or ZN, whichever one, it does look somewhat similar to TLT. But basically, I would be looking for some type of bottoming or like rebound in this particular asset because there's a lot of shorts. Everybody's virtually short if you were to look at like COT data on this one. So that's potential for, a really powerful squeeze. The squeeze that we saw back in like the middle of that formation, what is that? If you keep going back, yeah, right there. That was when we had the SVB crisis. So perhaps if you see some type of lowering of rates because, the economy's in trouble or so. Basically, this is the recession trade, in my opinion. Like if the Fed has to do something with rates, this is probably the asset or the asset class that's going to be one of the primary targets. But like, yeah, I don't usually when Ackman talks, he needs to like offload a position. So I can't really, I don't know. I wouldn't take him at his word.
Well, you said they also were not short futures. It was options, which sounds like a legitimate hedge on another position, if I had to guess. Like, I'm surprised no one called them out on that. So,
he's pretty hated across like crypto or just FinTwit in general. But
well, because he's always jawboning about something that he's virtue signaling about, and everybody just knows. To like 20 years ago, it was like, oh, Ackman's so smart. He made one good trade and called somebody out. Now it's like he's done it so many times, and it's, you don't bat very heavy on shorting companies, to zero, and that's what he's famous for. So
Herbalife was an actual scam, and he still couldn't short it.
I know. That was honestly a really good documentary. I did actually really enjoy the Herbalife documentary. And I was myself shocked that he lost that battle. But
I thought you were gonna say I myself was an Herbalife.
Yeah, me too. I thought
you guys need some smoothies? I got some in the fridge. No, I've never done an MLM scam, thank God. So and have not known anybody to do one, but I'm sure we all have some stories.
It's called DeFi now.
All right, well, let's talk a little bit about equities and commodities. I know, CJ, I think you were looking at coffee again today, and we've got a couple of coin questions, and I think we have Apple and Amazon reporting this evening. So I'm going to let either CJ or Monte take over the charts from here as we move over into what has been the more interesting side of the market.
Yeah, I guess I'll just go first and give a quick update. So in terms of energy, we saw that bounce back and be very strong in kind of like the second quarter of trading today. So had to get out of heating oil very quickly, but not a problem there. I do still like shorts in stuff like oats went limit down today, or not oats. What was it? Cocoa went limit down today, which was very interesting. And then also, if you
and
what's
OJ?
up? OJ was limit down yesterday. Let's see if it went limit down today. No, I was only down 1% today, but still looks pretty vulnerable. So yeah, I mean, you have that relationship going on. And those are pretty much all risk off trades, like short cocoa, short soybean oil, short oats, pretty risk off trades. Maybe hedge with a Russell. I don't know. I haven't decided yet, but those are the three that I've really been looking at. And yeah, like as far as futures, there's just been a lot of bullish news this week for cocoa, and it continues to, or it's just had one very bearish day. So figure it might be worth a shot. Yeah, I mean, as terms of like futures, not a whole lot going on. In terms of coin, Monte, I know you were going to be a bit more aggressive on that one. I'm just going to wait. I think even if it has good earnings, I mean, you really don't know. Like especially with what we saw with Robinhood, they made a killing off their interest, and still the response was quite bad. So maybe coin is different, but I'm personally not going to be betting on earnings. I'm just going to wait and see if I can be lucky enough to get it lower. If we get some bids coming around to like 85, 80, maybe even 70, I don't think it would drop below.
Coin does have a new revenue stream now. I think they got in the 9 figures in fees, maybe 8 figures in fees, if I'm not mistaken. I did see some reporting on base fees, and I'm pretty sure Coinbase collects all the base fees. So
there's no chance it is.
I don't know if the market's going to be pricing that in or has priced it in yet, but I did find that interesting that probably only a crypto nutcase would be aware of immediately, considering how much we track fees and on-chain stuff. So
I heard that we're making, like, the first couple days they made around 700K per day, and somebody on Twitter is like, oh, therefore that equals $85 million a year of new revenue for Coinbase. Wait till Wall Street finds out. It's like, that's the first day.
Yeah, that was a tweet.
That's not going to be consistent.
It was 750K a day, was it, CJ? Maybe I was adding zeros.
That's what I mean. That's what I saw.
That's Davey Day Trader logic. What does he say? 1.2 mil. I do this every day, but I'm gonna be a billionaire by the end of the year. It's like, no, it's not how it works. The markets don't work like that.
I mean, look, if it grows and it becomes something, then we can have a more serious discussion. But as of now, it was just, people wanted to buy bald. So what's the next thing? I mean, for God's sake, the bridge doesn't even have a front end. Like, it's getting there, but it's still a long way.
And the biggest DEX exit scammed, which is just.
Monty, what do you think about coin? Do you have any different opinions going into earnings here?
Well, one thing I will say about earnings, I think coin will have strong earnings. I am in a coin position, full disclosure. I just bought some spot coin, not playing options or anything like that. But one thing that is relatively concerning is if you look across the board, essentially at basically all the Q's assets, and this is the Amazon chart, which also has earnings after hours today. Just take a look at kind of how these stocks have performed post earnings in like the days and weeks following earnings. It's been kind of or not kind of, it's been very weak. Microsoft is a great example. It's since its earnings on the 25th has been down, it's down from 350 to 327. You have Apple which it had earnings yesterday, or no, wait, it has earnings, excuse me, today, but already turning down. No one really front running this. So it's going to be interesting to see. I'm with Coinbase. It could be different because of its proximity to crypto. This is basically the setup that I have for Coinbase. Like I said, I purchased spot. I kept the stop loss super tight because I do think there is a chance that we get that sort of same thing that we saw with Microsoft, where it's like, okay, it had a nice like pop on earnings, but then it just started to like slowly bleed out. And if that does happen, I just want to get out of it, because what's the next catalyst going to be, if not earnings? So this is the setup I have. I'd definitely exit if we hit 108.50. I'd be out and a very happy camper. But the fact of the matter is, like, a lot of these risk on equities, and Coinbase is certainly included in that class. Since their earnings have essentially been like, obviously Google popped hard on earnings, but since then has kind of been turning down, and we're seeing that with a lot of stocks that had earnings that were strong, and then since then they haven't really shown any signs of strength. So
Meta just looks like a freaking year-long TWAP.
yeah, that's pretty much what it is. But yeah, that's the only, this is really the only trade I'm in right now is Coinbase.
I mean, it's a
And it's
decent
just,
setup,
like I
especially off that little range right there from early July, where all that buy volume was.
Yeah, exactly. Yeah, we had a lot of sell volume way back here when we first spiked at the beginning of the year, and we saw that crazy price action. There was a ton of sell pressure here, and same again here. So, you know, I like the fact that we bounced from that level, put in this doji-ish candle, got a bullish engulfing candle today. Also, the DXY turning down. That in conjunction with the fact that it has earnings coming up. I just like I just like it as a play to the upside when um because I'm not trading Bitcoin right now. That's just the way it is. So
I mean, and to add to your coin chart too, I mean, just the fact that there was a lot of buy volume there, I would assume people have been taking profit higher, but I would be remiss to think that buyers there would not at least try to defend that. So I think the RR in that scenario is a fantastic opportunity. So good luck on that. I'm obviously hoping that I'd appreciate some higher price action from anything crypto related right now. So fingers crossed on that one. Let's talk about Apple and Amazon. I will admit, I'm not, with the move and everything like that, I've not been on top of major equities. Obviously been keeping my eye on S&P, but CJ, Monte, do either of you guys want to bring up? Let's start with Apple, just because that's the larger of the two, I think, and talk about what we think is going to happen around earnings. Now, we've obviously pulled back a little bit. Still kind of what you would call the range near the highs. And we're obviously at the low end of that range, in my opinion. So, decreasing volume is a little bit worrisome. Other earnings didn't seem to have that much of an effect. If you look at the past few earnings prints, they weren't too major of an impact. But what are your guys' thoughts here? Are we thinking that we might head higher on earnings, or do you think it may just be kind of a nothing burger? I did hear a rumor that iPhone demand was slightly down, which could be worrying. And if they put that in a guidance, that could also be more worrying. But any other insights from you, Monte or CJ?
Just the expectations are going to be a little bit lower, I believe. So it seems like we're already seeing de-risking into that. But yeah, I mean, this chart's like literally a 45-degree angle just up to the right.
Market
I mean, look, I think today is a good day to just probably do nothing and just wait into earnings and then like be a little bit more reactive, because it's a lot easier to buy the breakout to additional new all-time highs on Apple, as opposed to, buying after this bearish engulfing candle when, the trend is starting to show a little bit of weakness. The bears still have not given up on the stock market in general. I still think stocks are going much higher, but that doesn't mean we can't sell off, 5-10% in the meantime, in which, more bears come in, we get more shorts, and we squeeze to new all-time highs. That's kind of, what we've been thinking. But I don't know, right? I don't know if that's going to happen. I have no idea what's going to happen after earnings, and like pretending that I know, it's just like, it's almost a disservice to myself.
That's a good point, and the honesty is appreciated. I think our listeners and viewers are going to respect that kind of candor. I would as well. I'd hate for you to tell me something with confidence when you're not actually confident. So we can all respect that, and I would say, just based on general market outlook and kind of how I've been feeling, is I have been a little bit more bearish than bullish, but also history has taught me fading Apple and Amazon typically is not a good thing to do past a week or two. So, I definitely wouldn't be shorting this with vigor if you do believe that iPhone sales and demand are going to cool off and maybe guidance relaxes into Q4. But also, this is one company that it's tough to fade. So, Monte, do you have any thoughts on this? So I don't think you're playing it, but just for the round criticism.
Yeah, no, I'm not playing it, but if I were to be playing it, and I may be doing the audience a disservice by saying what I would do, because, I mean, like CJ said, if I know what.
Let's enter the realm of hypotheticals.
Yeah, we're entering into the realm of hypotheticals, which is always dangerous because I don't have any skin in the game. Hence, take my words with a grain of salt. But what I mean, CJ said this is like basically a 45-degree angle up and to the right, and has been since the beginning of the year. Is that going to change tomorrow? Is that going to change after earnings? Most of the stocks in the queues, at least on the day following earnings or on the day of earnings, have shown signs of positive price action. So stocks that had, like Google, for instance, even Meta also had some nice price action before pulling back a little bit. But regardless, I think that we see the same thing with Apple. Last time the thing to watch out for this time is the $200 critical level. One thing that is interesting is this is a 52-week high for Apple. So when we had our last earnings report, it jumped up significantly, but then that was met with a period of consolidation for basically 2 weeks where price was choppy. People tried to, get in on it, and were forced to capitulate because of the, if you got in on this and you expected it to keep moving like this and you bought call options, time decay would have absolutely killed you, and you would have had options that were expiring essentially worthless. So that's something to definitely watch out for. I will say, if you're going to play this and you're going to use options, just be careful, because I do think it will. I think it will beat, and I think we could see new highs. But if that is the case, I would take profit immediately, because what we often see when Apple does make new highs is, and this is not just true of Apple, like I pointed out with Microsoft and Google and Meta, after earnings, they saw a period of consolidation / pulling back. I think that's definitely on the table for Apple. So I wouldn't be surprised to see them see it opening up tomorrow at around 198, around the 52-week highs, and then begin to consolidate and pull back. So that's just my thought for Apple. I do think they beat earnings and showed some life, and that's also based on what I'm seeing in the DXY. I know CJ said, that relationship doesn't have to exist, but for now, I think it, and I do agree with that, but for now, I think that people will be watching the DXY closely, and this is looking set for a reversal to at least 102 which I think would be enough to allow Apple to head back up to those 52-week highs. So that's what I'm seeing.
Be
Yeah, you make
careful.
a good point. Go ahead,
Be
TJ.
careful in the FX trends, man. Some of those FX trends, they can go on for a long time. So we'll see, right? We'll see. Seems like
Yeah.
people have been really bearish dollar for a while. So I'm interested to see if we actually do reverse here.
Yeah, Monte makes a good point about options too, especially around earnings. Sometimes they'll spike in the after hours only to reverse by the time the market opens. And if you don't have your account set up correctly, you can't sell your options when they're up. And you have to obviously capitulate, when the market opens. So just something to be aware of if you are, trading complex strategies, especially around earnings, because things do get tricky. So really good point there. Let's clean it up with Amazon, just because this is something we use every day. Well, at least I do. But the chart doesn't look beautiful, in my opinion. I really do hate these kinds of formations, because a lot of times people will interpret this as an early type of bull flag. You could also kind of see a descending triangle starting to form as well, which is not bullish. So this is a very tough one. But I will say, the clear support here is sitting at about 126.5. That looks, to be, relatively strong here. And then obviously, you can call, let's call this up here, resistance around 135. So this is more or less your range that you're trading in right now. And you've got a series of potential lower highs forming. This doesn't, just from a technical perspective, if I'm kind of just zooming out here, I am seeing, we talked about this on another chart before, as well as lower highs in the higher time frames, and that is certainly worrying. And I will say, having the estimated 200 moving average, starting to curl up is usually a sign of positivity. But we kind of have this low right here untapped. And this trend, which it has played off of, if we let's zoom out, it typically will play off the estimated 200 moving average at many points of its life cycle. So it would not shock me if, Amazon, maybe faced a bit of a hit. But I'm not going to act like I look at their earnings and their numbers and all that fun stuff. I'm just kind of staring at the technicals here. So, definitely, if we're talking RR, risk reward, buying, 126, 128 with a target of 133, 135, not the worst idea. But, if you break below this, 126 level, in my opinion, just from a technical perspective, you could see a tap at the 1 day estimated 200 moving average at some point in the near future, meaning, maybe the summer. So CJ, Monte, any thoughts on this? I don't think either of you guys are in this, but just because I know a lot of people will be interested in this, want to get your guys' full spectrum on this.
For sure. So for me, I'm actually bullish on Amazon, and let me just briefly explain why. It probably won't be brief, knowing me. It's probably gonna be long-winded and
Let it go.
Talk in circles. But anyways, Amazon. Last time they had earnings was on what was this here? The 27th of April. And look at what the estimate was, 124, right? And then they beat by 2%. That kicked off some very nice price action that continued for quite a while. The estimate this time is 131 billion. So 7 billion, or 6.5 billion more than their previous quarter. And what has changed between then and now? Or what notable events have taken place between then and now? I would say the most notable thing has been the AI wave that occurred, whenever it started. I don't remember when, it really started to impact the market, but I think that we could plausibly see, because of Amazon's role in AI, one, they have an incredible amount of information. Two, they are operating 60% of the servers in the United States. So like chat GPTs on their servers, anything else AI related, you're probably building on Amazon servers. So I think that end of their business, regardless of how much Nick is ordering, full length body pillows to cuddle with off Amazon every day, that doesn't matter. I think
I'm more concerned how you know my order history, Monte. That's what I'm more concerned about.
I saw it up in your tab when you shared your screen, but just kidding. I think that like the server side of things and the fact that the AI revolution has been like such a strong narrative, and so many people have rushed to build AI related products, that is great for Amazon's server and their web-based services. So like AWS, I think is going to bring in a significant chunk of revenue on top of what they make. Of course, selling goods. Because I too, Nick, am on there buying something pretty much every day.
Yeah, I mean, my all jokes aside, I definitely don't have any waifus in the house. That much I can promise you. But that is where I get all my protein and a bunch of other stuff for the house and miscellaneous stuff. All my dog stuff comes from Amazon too. So we do like Amazon, and I would like to see them continuing to perform. I think they also just have a really good business culture as well, from what I've heard. So I like the company all around. But we'll see how everything plays out. Today will be, fun after hours. We'll also have the, if for anybody who is, maybe a night owl, has some time in the evening. We also do, myself as well as Alex, B3 Radio at GetRev Radio on Twitter. We'll obviously be breaking down earnings on Coin, breaking down earnings on Apple, Amazon, several other companies, talking about predictions for next week. So if you want to get kind of an after hours debrief, you're more than welcome to join us on that. That'll be on Twitter. And just, search at Trade the Chain or at GetRev Radio, and you'll see us on there at 5:30 p.m. Alex just added it in the comments at GetRev Radio. So 5:30 p.m. we will we'll be there. And then, just before we go, just want to make sure everybody is aware, 14 days free trial at tradethechain.com, risk-free, free trial, join the community, access the data, see Monte, CJ, and I's trade calls, trade insights. We're obviously dropping news as soon as it comes across the wire, making sure that our community and our traders are always up to date. And if you missed it at the beginning of the session, we are sponsored by Dydex now. So get 5% off trading fees at the link below. It is trade.dydex.exchange/r/trade the chain. I know it's a lot, but type that in, you'll get 5% off of your fees. And additionally, by trading at Dydex, you will earn Dydex coin via rewards for trading. So just by paying fees, you'll get some of your money back in the form of Dydex just for trading on there. And that is very, very much of a thank you from the exchange to encourage you to continue to trade and participate. So really good opportunities on Dydex, and CJ, Monte, and myself, as well as Alex, will be doing some live trading on Dydex and doing a lot more work with them. It is a decentralized trading platform. So your keys, you own your crypto, very little opportunities for exploits or any issues. But as always, we do recommend, do not put all of your money on exchanges. Always trade with a portion, especially if you are trading futures. Start small, work your way up as long as you are successful. So good luck. Happy trading, and we will see everybody next Monday.